Hi everyone, hope you're all doing well. Today I'm going to talk about a stock that I really need to buy more of. A stock that brought out earnings the other day and I went, wow, that's probably one of, if not the best earnings report I have ever seen on a beat point of view, and the stock basically did nothing. And I went, hold on. When you've got a disconnect here, where the financials are going like this, but the share price is not necessarily going downwards. Obviously, when you got a share price going downwards and the fundamentals are going upwards, that's where you're like, wow, what is going on here? We had a lot of that during 2022, if you remember, with the likes of Celsius, with the likes of DraftKings, with the likes of Hims and Hers, Mercado Libre. So there were so many stocks like that during 2022. But we don't really see that many now that we're in a bull market. But that time frame, we had a lot of stocks that the fundamentals were going like that and the share price went like that. But even now in the bull market, we have a stock here where the fundamentals are going like this, but the share price is staying flat. I think year to date, I think the stock has done nothing, but yet the fundamentals have massively outperformed. And I'm going to show you that stock because I believe I need to start buying more of that stock. As well as that, I've got a couple of news stories just to kind of go through you guys and share you a couple of updates on a few things. So I hope you enjoy this kind of recap of a video. So first one, Hims and Hers. So we had a really good day earlier this week. Was it Monday? Yeah, Monday. The share price went absolutely crazy. As you can see here, we're up 30+%. Since that time frame, the stock has actually given some of it back. As you can see here, the stock is around about 13%, and this is why sometimes when, even though the news that we did have was very good, sometimes when you see the kind of mega jumps, there's sometimes some, it's a good time to maybe take a little bit of profit off the table. And for anyone that did take some profit off the table, obviously now you can actually probably rebuy those shares at even low prices and have made a profit right now. So yeah, I think I mentioned that on the video when I did Hims and Hers, actually, to be fair. But I mean, yesterday the stock was down basically 8%, let's call it 8%, and I couldn't believe it. Like, I looked at this here, and Citigroup basically came out and they cut it from a buy to neutral, and I was like, right, okay. But then when you actually look at it here, they changed the price target. They raised the price target from $16 to $20 a share, and I was like, hold on. So you are increasing the share price, and you've increased your share price prediction for the next 12 months over 20+%. But then you also cut it at the same time. Like, it's not linking up, guys. It's not linking up at all. And sometimes I just look at this and think, are these kind of trying to create an opportunity where potentially they can, go buy some shares at cheaper prices themselves? Because surely if you're changing it from a buy to neutral, you don't increase your price target. You'd either keep it same or you decrease it. Like, it's just crazy. Some of these analysts here, guys, honestly, don't pay that attention to them. Half of them look like they just don't know what they're doing half the time. And another one here from Citigroup, this just doesn't make sense. So yeah. Next thing, general election. I did a video on inflation actually yesterday, and actually made me realise is that obviously I focus a lot on stocks and trying to educate and share my kind of knowledge on stocks, and hopefully if you guys do find that useful. But the first time I'm kind of like, I don't really go too much out of the stock market direction, into more of the finance news kind of space or general finance news. I'll leave that for a lot of YouTubers to kind of do. And yeah, I was really surprised to see like the misunderstanding around inflation. There was definitely a lot of comments I saw that really show that there's not really a good understanding around inflation. Maybe it's something that I can maybe touch on a little bit more going forward. We'll see what happens. But anyway, obviously probably capturing on the news of inflation back at the 2% range. General election announced. Really surprised. I was actually watching a bit of the PM questions on Wednesday, and there was no kind of suggestion that there was going to be an announcement on that day that we were going to get a general election, and then obviously we have it announced in July. I really did not expect this. I really thought we would see a general election towards the back end of the year, October, November time, and I thought that would give the current government time to kind of get more inflation even lower, maybe get an interest rate cut in and go, hey, look, we said we were going to get inflation down. There you go. We are now cutting interest rates, even though it's more towards the Bank of England. I really thought they would leave it as long as possible to try and like push some like a lot better economic data out there, as going, look, hey, we're doing a good job, honestly. So yeah, I was really surprised by that. So obviously that's going to be in the media a lot in the next kind of few days. But I think I made predictions at the start of the year, and I said that my predictions were a winter election. I did not expect it to be coming in July, but there we go. Nvidia up 7% today. I think we'll have a pretty good day in the market because of Nvidia going up. And wow, this isn't the stock I was going to talk about. This stock isn't the title of the video, but I thought I'd just point it out. I mean, incredible numbers. EPS was a mega beat. Revenue was a mega beat. 262% year-over-year growth. That's nuts. 10-for-1 stock split, quarterly cash dividend raised to 150%, which was to 0.01 per share on a split basis, which I thought, wow, very small when you look at that point of view. It looks like a big increase, but yeah. But then again, a 10-for-1 stock split will see the Nvidia share price look a lot lower. Obviously, it doesn't change the financials at all, but that's one of the things that they do to do a stock split is they thought that if the shares look lower, they seem more cheaper to some people, and they're actually cheaper to acquire. You know, actually paying up some, obviously fractional shares nowadays doesn't make it that much of a problem buying a stock that's at $949. But they still tend to do it anyway. Outlook as well. Yeah, big raise in the outlook as well. I mean, I was looking at Nvidia and I was like, 37 forward times earnings still isn't crazy for this stock. That's the big thing. When this whole AI buzz started to happen, I really didn't realize how fast this was going to move and how fast the profit and revenue were going to grow. And very quickly they can probably grow into that valuation. And I mean, it was obvious. I mean, I'd kind of kicked myself a little bit because I did say I should really actually buy some Nvidia, because I listened to probably like 30 different companies' earnings calls in the last like 3-4 weeks, and I can't even, like, the number of companies that were saying we are spending crazy on AI and they're increasing the budgets to AI and they're pushing a lot of the budgets towards AI. It was obvious this was going to happen. If you listen to a lot of conference calls, it was obvious the amount of big tech that were spending money on AI, and I probably should have realized that and maybe potentially bought a bit of Nvidia. But yeah, I still don't think it's terribly valued, actually, looking at the numbers here. But it's one of those, isn't it? Like, is there going to be a time where everyone kind of goes, you know what, let's take a bit of profit off the table, and then it does have that kind of 10-20% dip, and you would kind of wait for that. But very good numbers, very, very good numbers for Nvidia. The one I want to talk about, though, is PDD Holdings. So this is a stock I own. It's one of the newer additions into the portfolio. And I mean, 25 times earnings, and the numbers were about as good as what Nvidia's were, to be fair, on a beat point of view. But the difference is this trades at a forward P of 12 times forward earnings. And I know there's a Chinese stock, so there'll be people in the comment section going, Chinese stocks already. But even from a Chinese point of view, there's got to be a point of view where you look, okay, maybe it's worth a buy here. And I that's what I generally think here. Like, you look at the EPS beat by $1.40. That was nearly, I clicked on the wrong thing there. That was nearly a double beat on the EPS. Revenue growth, 131% year over year growth, beat by 1.4 billion. So they did 12 billion in revenue and they beat by 1.4 billion, not million. Normally we talk about beats in the millions. Billion. Absolutely crazy numbers. To beat EPS by double and revenue to grow 131% and grow to beat by 1.4 billion. That's absolutely crazy, guys. Absolutely crazy growth. And 12 times forward earnings. You just don't see these numbers for a company at 12 times forward earnings, guys. Even if it's a Chinese stock. I mean, surely you've got to be sticking 30, 40 times earnings multiple on this stock for these sort of numbers. Even if you say it's a Chinese company. I mean, if it was a US company, I mean, I'd see what they grow at then, or what they trade at then. But it's absolutely insane. And the thing is, when you look at PD Holdings as well, I mean, like I said earlier, year to date, this stock is up 1%. 1% year to date. I mean, if you go on the year out, it's obviously up a lot more. But year to date, it's like, yeah, we've reflected it recently, but now we're just going to stop reflecting the share price with a financial improvement. Because it's not like it's a rich valuation. It's 12 times forward earnings. It's not like they're not still hiking up their estimates. I mean, look at the beat on the revenue and EPS. And just to put it into context, I went on Wayback Machine. And this screenshot is taken from October the 23rd, as you can see here. And just to show you like the improvement on the financials, is that when you look at what they're expecting to do this year, so they were expecting to do 27% this year. Now, from October to May, look at how much this has been increased by. So they've actually grown the revenue by, now expected by analysts, 52%. So they've increased their revenue guidance, analysts have increased it by 27%, up to 52%. Okay, that's crazy. If you look at an EPS point of view, so they were expected to do EPS of $5.97. Okay, the EPS for now this year has already gone up to $8.79. Right? Look at those upgrades, guys. And we're only in May. I mean, imagine what they're going to do by the end of the year, guys. and not counting the fact that a lot of these forecasts haven't got the new massive mega beats that have gone on here. So you look at the stock and it's not really done anything this year, but yet the financials keep improving and improving and improving. Now, over the longer term, like it has done, I think the share price will start reflecting this. However, what's happened in the last kind of 6 months is that the share price has stopped reflecting the fundamentals, and we've got that disconnect. Now, as we know, over the long term, stocks will reflect the financials. And if PDD keep having these hike up in the guidance on EPS and revenue point of view, and they keep beating like this, it is going to reflect it on the share price at some point. Whenever that point is, I don't know. But while this is kind of sitting at 12 times forward earnings, it's doing these numbers. And even if it's a Chinese stock, guys, I mean, just think about like a multiple of 20 times earnings. Let's just go market average, 20 times earnings, which I think is fair enough for the Chinese risk and the numbers that these guys are doing. You're getting nearly towards 100% upside already. And that's without factoring any of the growth that they're doing at the moment. And that's without factoring the amount of profit they're throwing off at the moment, because they are throwing off mega amounts of profit anyway. So it's mega, guys. It's absolutely mega. And I just look here going, you know, the only thing I'm weighing up is like, how big do I go? Because obviously I am taking in the fact that it's a Chinese company, and I am putting that, you know, you never know, we might have another looking coffee situation here. You never kind of know. So you've always got to have that kind of in the back of your mind here. But I'm like, how big do I go? Because at the moment, I'm just seeing that big disconnect from the financials and the valuation here, and I just think it looks very attractive. So, yeah, I really like this one here, and I just don't know why. I mean, the stock was up. I think when the energy reports came down, I think the stock went down 8%, and then it went up like 8%, and then by the end of the day, we were only up 1%, which just doesn't make sense. I don't know how you can bring a report out like this and then go up 1%. It doesn't make sense. I mean, this is as good as report as what Nvidia have just reported, maybe even better than Nvidia's report, because you look at the beat on the revenue point of view, is the same, but look at the revenue, you know, they were doing 26 billion. The EPS was double compared to Nvidia's. Was a good beat, but it wasn't double the beat. It's insane, guys. It's really, really attractive. So yeah, I'm just kind of weighing up how much do I kind of buy here with the Chinese risk here, but it's looking good anyway. So anyway, hope you enjoyed the video. Just a bit of talk about hims and hers, Nvidia, some UK politics, election, and PDD, guys. Hope you enjoyed the video, guys, and catch you in a bit.